Okay, today is Monday, September 9th, and in this week's recap, the three Wall Street benchmarks advance as investors respond to newly scheduled U.S.-China trade talks and see a silver lining in the latest employment and manufacturing data. Life is too short to worry about what the next headline could do to your life savings. Hi, my name is Eric Hagan, and I keep my thumb on the pulse of the economy and the markets so my clients can focus on the things that are actually important to them. Thank you for joining me the next few minutes on today's weekly economic video update. Stocks rose last week with help from two developments: the announcement of further U.S.-China trade talks, as well as August hiring and manufacturing numbers that seem to bolster the argument for a rate cut by the Federal Reserve. The broad U.S. equity market, as represented by the S&P 500, added 1.79% during a shortened four-day trading week. The Dow Jones Industrials Average improved 1.49%, and the NASDAQ Composite 1.76%. Foreign shares, tracked by the MSCI EAFE Index, gained 1.69%. Trade representatives from the U.S. and China are planning to head back to the negotiating table early next month. This news came Thursday from China's Ministry of Commerce, which confirmed a verbal agreement among Secretary of the Treasury Steven Mnuchin, U.S. Trade Representative Robert Lighthizer, and Chinese Vice Premier Liu He. Formal trade discussions between the U.S. and China last happened in July. China has said that it wants punitive U.S. tariffs on its products removed in the event of a deal. Payrolls expanded with 130,000 net new jobs in August, according to the Department of Labor. 25,000 were temp jobs linked to the federal government's 2020 census. The main jobless rate stayed at 3.7%. The U.S. rate, which measures both unemployment and underemployment, rose 0.2% to 7.2%. A key gauge of U.S. factory activity, the Institute for Supply Management's Manufacturing Purchasing Manager Index, fell to 49.1 in August. A number below 50 indicates factory sector contraction. Some investors took these hiring and manufacturing reports as hints of a slowing economy, one which the Federal Reserve could potentially try to stimulate with an interest rate cut. Okay, and looking at what's ahead, August inflation data arrives this week, and if it looks especially mild, it may amount to another suggestion that the Fed should ease. The European Central Bank concludes a meeting on Thursday, and Fed officials will certainly pay attention to its latest policy statement. Hey, this is Eric again. That's it for today. Don't forget to subscribe before you leave. To learn how I give my clients' life savings the attention it deserves, visit me online at www.erichagan.pro. If you'd like to get financially organized, go check out nocostfinancialdashboard.com. And lastly, if you'd like to take control of your 401k at work, visit us over at 401kinvestmentpros.com. Thank you again for your time today. I'll look for you next week.